Hello everyone, welcome to Pivotal Traders. I hope you all are doing wonderful. So tomorrow we have expiry day and I know you all were waiting for me, but I was kind of lazy today. Anyway, I just buckle up myself to bring to you the expiry plan for tomorrow. And so let's talk about the price action front. And the price action front, we have a congestion zone from where the black line was originated, and then it gave a quick upside move. Now, it was also a breakout in the sense that the Bank Nifty is now sustaining above 38,000 very comfortably, and the Nifty, on the other hand, is performing quite well, even better than the Bank Nifty. So, even though the Bank Nifty had to catch up the Nifty, the gap is getting wider and wider where the Nifty is going further far away. So what's the plan for tomorrow is simple as such. We'll be using Fibonacci extension for this, where the black line would be the point of origination, and from here the Bank Nifty has gone up to this level, the highest peak point. And if we bring back the Fibonacci extension back to the point of origination here, then we get some lines which would act as resistances. Now the favorite one would be the 127 Fibonacci extension level, which would be something around this here. So we'll be marking this with the red line. Okay, so this is a futures chart of the Bank Nifty, and you can approximate it with the Bank Nifty spot chart, because to get the richness of the data, I'm using the futures chart here. So please adjust your strike prices accordingly. So what I sense is here that if the Bank Nifty opens flat, now the flat opening would be causing some kind of reaction, which would be kind of compensatory to the fact that today the Bank Nifty opened gap up, but it was not able to make a higher high. So it made a lower low here, then was not able to accept the higher possibility here. So that's why the kind of got confused and then closed the market in a haywire. So tomorrow, if the market tries to give us a sense that it is opening flat, then again the momentum should be there, scene of profit booking, because nothing happened yesterday and tomorrow would be expiry date. Naturally people would not be keen on to continue their trades for tomorrow and would look for some kind of profit booking. I will also be explaining why I'm having this kind of a biasness, where I'm looking to the fact that in the event of a flat opening the Bank Nifty would follow a profit booking. This is because I have a background analysis of the data where the PCR supported this particular viewpoint. So I would expect that Bank Nifty would be a little bit bearish if they in the event of a flat opening. Now in the event of a gap up opening, it would be some kind of a similar reaction where the gap filling would be much quicker in a sense, and then some kind of volatility again should be there in the market, and this would not be very much abnormal, it would be very much normal, and you can expect this. Now the gap down would be something more than interesting, where the gap down would means that yes, this price, the island was formed and this island would be secluded like this island. Let me just form this boundary you see here, the green boundary. This will be acting as an island, so this would be something rejected by the bulls and the bears, and then if the gap down opening happens, suddenly we will see quick profit booking will happen in the market, and the market should act and take some support at the black line and should close something like this. So this is the exact plan for tomorrow's Bank Nifty expiry. Now to support this viewpoint, the upper side would be adjusted a little bit, something around 38,900 somewhere, and to the spot I'm adjusting it to the spot, and from the below point 38,250. So 38,000 is a safer bet here. Now if I look at the option change, very interesting data points are happening here, where we see that 38,600, which I also gave on my Telegram channel, that 38,600, I'm shorting it since yesterday, this straddle, and you see the addition here. Even though the maximum call addition has been at around 39,000, where the call writers are very much confident, the maximum change which happened today was at 38,700. You see that the confidence for the call writer are around the vicinity of the spot price. Okay, Now look at the confidence of the put writer. Now the put writer are very much confident that 38,000 now would be a golden point which cannot be broken by the bank nifty. So they are very much confident. Now look at where they are adding the maximum puts. OI change maximum happened at around the 38,600 level. Now, this points to the fact that put writer are kind of a more than confident about current price point, and that's what they are looking to mint upon. That they are confident that the market should be above 38,600. But if I am to compare the data points around this level, you see the maximum OI is just 8 lakh rupees. Okay, 8 lakh points. The OI is just 8 lakhs. Okay, and the maximum OI at the maximum change in OI is around 13 lakhs. So that is the kind of difference we'll have. So 38,500 would be something worth spending time for the market to experiment, to check, to decay the premium. That kind of volatility will happen here. Now, if I'm to look at the PCR, you see the blue line here. The blue line started at around 1.27, then it was just falling and falling. Even though the bank nifty was going on the upper side, it was just maintaining its hegemony to be on the downside. And the gap, you see the gap between the put writing also kind of closed, where the put writing was falling, the call writing was increasing. So that is the gain in the confidence of the call writers. The call writers were heavy upon the put writer. So this is the takeaway for the today's market ingredients, that the call writers were getting constantly heavy upon the put writers. So this is the background for the data, and let's see how it rolls tomorrow. All the best for tomorrow, and hope you like the video. Do subscribe and comment.